Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the first day in April.
Yeah.
Week ending on, I guess, technically April 3rd. Markets aren't trading on Friday, though. So,
hmm
market week ending on April 2nd. We're recording the afternoon, it's about 3:30 p.m. on April 1st. Got Ian Saunders here with Joseph Tuzzolo. How's it going?
Good. Feel a little bit better, hopefully, about markets after yesterday's bounce.
Yeah, green is
Um,
always good to see
yeah.
after a lot of red.
After a
Well,
lot of red.
we were talking,
Well,
it was red, but maybe not as deep a red.
the fear was a little bit higher than what actually happened.
That's a good way to put
Like
it.
the VIX was pretty elevated, but realized volatility was historically normal.
Right.
Kind of a weird environment from that perspective.
Yeah. You did a little bit of work on that. I think we can dive into that. But before
hmm
maybe we go into we can just talk about maybe some of the performance. We're three
Yeah.
months into the year. 2026 we enter this year with three consecutive years of strong gains from the S&P,
hmm
or from core markets, core domestic equity market. However, we also enter this year with pretty strong performance last year in international equities.
Yeah.
Over the course of the past month or so, we've seen some fluctuation in the top rankings of our relative strength-based Dolly asset class rankings.
Yeah.
International is now at one, domestic at two, commodities at three is kind of the lay of the land through Q1. We figured we maybe kick things off looking at we look at every quarter kind of how do different factors do, both the U.S. markets and international markets on a quarterly basis. So we call them smart beta quilts, right? Smart beta, not a term we originated, but I think we use the quilt tool on the platform and kind of give some nice parameters there. But we see a lot of consistent themes show up over time. The quilt, we'll throw it up on the screen. It's colorful. It's not the same every year, but a lot of the themes behind it can be the same like year to year, like over year. Is that
Yeah.
fair, you
Yeah.
think?
Yeah, for sure.
I mean, the when we're looking at it, two of the main themes that we see, contrarian switching and return chasing being two kind of market players, if you will,
Yeah.
right? Contrarian switching strategy buys whatever was the worst the year before
Mhm.
type of approach. Or in this example, shows you the performance of whatever was the worst
Yeah.
the year before. Return chasing shows you the performance of whatever was the best the year before.
Yeah.
Return switching rarely does well. I mean, you're still positive on
Yeah.
net, but you're not beating the market. You're not even beating an equal weighted basket of all the different factors,
hmm
right? Contrarian switching, pretty a better approach to
Yeah.
look toward. Like things that were bad last year, maybe could be an area to consider this year, unless you're in 2025, right? When we saw dividend as the lowest performer in 2024 and 2025, but that's changed a bit in 2026, right?
Yeah. So far it's the best performing of the factors there. Actually, dividend was the worst in 2024, 2025, and the second worst in 2023.
Oh, I didn't even realize that. Yeah, I
Yeah,
thought it was the best in 2022. So
it
it's
was.
just
Yeah, it's a
3 year
pretty volatile
stretch.
factor for the dividend factor.
Yeah, it's also the worst cumulative performance back to 2007.
Yeah. Yeah. But with some of these things, like, we also see value was the third best performing factor last year, second best performing so far this year. So some consistency there. Really, where we've seen things drop off is the buyback, and then the benchmark itself. Actually, I think it would be the first time on record if the benchmark finished in last place um, out of these factor or smart beta representatives.
That's a good point to because like we usually have the benchmark, it's kind of around the middle by the time the end of the year shakes out.
Yeah.
We're only 3 months in, a lot can change over the next 3 quarters.
hmm
I would be shocked if the benchmark, I mean, we've had it be second to last in 2010,
Yeah.
and that was coming off of the worst bear market since 27, right? I mean, that's so I would be shocked if that doesn't pop up in the ranks. We see some stuff fall beneath it. There also most things were positive still.
Yeah, and this is, you know, what was in these factors versus what was like in the benchmark that wasn't included in a lot of these factors. I mean, that'd be something interesting to look at. I don't
Hmm.
think I have anything off the top of my head exactly. Um, but maybe software was not as a big a representative in some of these other, smart beta factors than it was in the benchmark, for example, which really struggled. Financials had a really rough quarter as well. And maybe maybe that wasn't in some of these other factors.
Right. I mean, dividend and value are typically underrepresented in the benchmark, right? Those
At least
factors,
nowadays.
yeah, typically nowadays, right? Yeah, that's a good qualifier. Nowadays, it's going to be smaller. It's also the first year we go back. Momentum is the only thing that can go between different factors.
Yeah.
Really, over time, it's the first time we've seen dividend value momentum as a top three. Like you typically, when you see momentum up higher, what's it close by? Growth,
Yeah.
right? Not the case this time. We've seen momentum kind of rotate into some of these other areas, maybe a little bit. And that's been why you've seen a little bit of separation, maybe from stuff that is underweight in the benchmark is kind of high performing. Equal weight still smack dab in the middle, though. I think that's another
That is
important.
another interesting thing, right? There's stuff that's working right
Right,
now,
right.
believe it or not. And within momentum, even like there's a pretty strong tech tilt still there. It's just we've been able to kind of avoid the stuff, the tech
It's
stuff
been
that's really fallen
focused
apart.
tech. It's yeah,
Yeah, a lot of dispersion within that sector itself.
yeah, for sure. Um, I mean, when we're looking at things like quality growth, growth and buyback are far and away the best performing cumulative areas. The only two beating the benchmark going back to 2007. And we got, I mean, the top three cumulative over the past since 2007 are the worst three so far for the year.
Yeah,
And so I, again, would expect some further rotation around this. This happens before. I mean, this happened last year.
yeah,
Like right this time last year, we didn't know, but we were gearing up for Liberation Day.
yeah.
In what was a pretty volatile first couple weeks of the year.
Hmm.
This year we see come in 331. Markets rally pretty strongly yesterday. Probably changed these performance numbers quite a bit.
Yeah,
Some of the rankings might have changed. We didn't run it, but curious what this would have looked like if we looked at it on Monday.
yeah.
Probably would have looked a little bit different because we saw several areas 2-3% up
Hmm.
yesterday,
For sure.
right? Um, so this will definitely be continue to adjust, but at least right now it's good to see momentum, which is mainly what we're looking at, even though um, the stuff we look is a little bit different than your classic momentum. This is still looking at our application of momentum, I believe here. It's able to tilt toward areas of strength, maybe over some other factors. When we're looking at though, the US side isn't the only area that we look toward the smart beta. We can also look toward developed market equities.
Hmm.
We talked about international being top of our Dolly rankings. Um, we haven't seen as much dispersion in the factors on the international front as we've seen on the domestic front. I think that was a pretty interesting takeaway that I had. Benchmark is still middle of the road, but the dispersion between the factors is not quite the same, although we're seeing similarities in where they lie.
Yeah, yeah. Like value, for example, is the top performing factor this year on the international front, second best on the domestic front. Benchmark's more middle of the ground, kind of what you would expect. It almost always is with international. You see the benchmark for domestic equities is kind of usually relatively close to the middle, but sometimes you see it as like the best or the second best or the second worst. This one, it's almost exclusively right in the middle over
Yeah, it
time,
really is.
um, which that's one of the things we've talked about in our research over the last year or so. Now that international has had a really strong run, we see the international benchmarks. There's quite a lot consistently performing better than it. So there's a lot of opportunities to take advantage of that from a momentum front. We're on
Right.
domestic equity front the last few years. We've mainly gotten punished for getting away from the core of the
Right.
market, right?
And that's because the core has done very well. International equities have done relatively poorly
Yeah, over the
for the
last few
past
years,
decade.
minus last year. Yeah,
Minus last year, up until last year for the past decade. I mean, you had what 2002 to 2007. I think you had 5 out of 6 of those calendar years saw the broad ACWX outperform SPX.
yeah.
Um, well, this is the first back-to-back year that we've seen ACWX outperform SPX that we're working on right now. We'll see what it
Hmm.
shakes out, but it would be since that period,
Yeah,
right? Which goes back further than Quilt does. But when you look at the international equities, I think an interesting thing to note, the return chasing actually is the best
yeah,
on here. So we don't see the same factor, just like they tend to be maybe a little bit closer, but you don't maybe what's does well also tends to continue to do well. Not the case necessarily with what we're seeing this year at the top end, although really the only thing that isn't up there, low vol buyback, it's also movement growth, back-to-back years, working on back-to-back years of underperformance.
hmm
So maybe the theme does kind of continue. Momentum isn't keeping up but it's also not that far away from value of
No, I
3%. I
mean,
mean, they're pretty close.
yeah, momentum to low vol are 50 basis points apart
That's great.
for the quarter. So there's really not much there.
Right.
It could be like after today, we could see that completely flip,
Probably
right?
would.
Yeah.
Yeah. Yeah.
So I think, generally speaking, I think the biggest theme is that international equities continue to do pretty well overall
Yep.
for the first quarter, kind of building off last year. There's been a couple times since I've been here over the last, 6 years or so where we've seen international get hot for a couple months and then it just completely falls off. And this has
Mhm.
really been different. And it's kind of continuing to be different than what we've experienced over the last, pretty much since like 2019 and even before that.
Yeah. And I mean, that kind of shakes out and looking at some of if we shift gears a little bit to the different asset classes, looking at the quarterly performance stuff that you put together for today's pulse, you can see some of that shake out in the quarterly performance review. Internationals have been the most consistent improver, but was not the only improver
Yeah.
in the first 3 months of the year,
Yeah.
right?
Commodities did really well, as I'm sure most people are aware of at this
Right.
point.
It's weird to see gold in red as the third best performing thing on the entire table.
And it was still up 8.5%.
Right, exactly. Yeah, it was still up 8.5%. It was the worst commodity. It wasn't up 40 like
Yeah,
GSG was.
yeah,
But that whole asset class, the whole performance did well. It was real sharp though.
yeah. And with any of these events that happen like this, um, especially with crude oil, I mean, they can reverse just as quickly as they happen. So
Exactly.
you got to be really on your toes at this point, especially if you were kind of late to the party within the energy complex.
It could offer some opportunities down the road. I mean, the way a
Sure.
lot of these relative strength charts work out is you get a move up, maybe you get a pullback,
Hmm.
and then the next leg higher could confirm some of that initial move, right?
To that point, gold is kind of interesting in that regard too.
Really?
Yeah, I mean, GLD pulled back from what 500 to about 400, and it's kind
Hmm.
of picking back up here. I mean, really volatile still, like with the rest of the commodity space.
Right.
But if people were waiting over the last 2 years to get a good spot for gold exposure, I mean, you probably got about as good as one as you're going to get. This thing continues to move higher on a
Right.
long-term
Yeah. You get a
perspective,
little bit more confirmation. It could be a decent opportunity
for
there.
sure. For sure.
Because even though commodities are still third in the rankings, they're still third. They're still in the top half.
Yeah.
We've seen them net when you look month over month. There's a lot of intra-month volatility. Um, International equities lost signals.
Mhm.
Domestic equities lost signals. Every other asset class gained signals
Yeah.
in our dollar rankings, and commodities gained the most.
Yeah.
Now they've fallen the most over the past 2 weeks, but they still gain the most month
Precious
over
metals
month.
again.
Yeah, exactly. So we'll see how some of that stuff shakes out. But when you're looking at on the U.S. equity front, maybe if we focus there, it's weird to see mid caps being the best, and it's even weirder to see Qs being the worst when we looked at first 3 months of the year. That's not been normal the past several years.
And it gets back to the cap weight story that we kind of saw in the smart beta quilt, you know, even some of the individual factors on the domestic front, buyback, quality, those type of factors tend to have a little bit of a size bias in terms of like
Mm,
large cap bias.
yeah, that makes sense.
And it is, I mean, the Qs were down 6% for the quarter. We were talking before, entered correction territory on Monday,
Right.
technically from their high, just barely. It's back above it now. So it could be, a 1 day correction. Um, but yeah, I mean, it's a kind of a different environment than we've seen the last 3 years.
I mean, I'm not going to say it, but when you look at Qs, I'm going to say it. I mean, I looks like a shakeout pattern.
It is a shake. Well,
Well,
if
it
it
could be.
reverses up,
It
it's a
looks like it
shakeout
could be,
pattern.
right?
Yeah, yeah.
I mean, that's like it's a big one, but it's a big point value wise. It's a big one, but I mean, you're
Yeah.
looking at uh, found resistance up at the 630 level, move to a sell signal. We always say first sell signal, strong uptrend. I think it's pretty clear to say that that was a pretty strong uptrend from Qs,
Yeah.
moving from April of last year. A single vertical column of X is higher. I mean, that's a massive move up. You would expect some consolidation. We were talking about this for months. I mean, we're like,
Yeah.
this thing keeps going up, it's going to have to come down. Well, it came down.
Yeah.
And we haven't gotten a reversal back up in axes. I think that would set you up with support there at 560. Would also be the buy point on a shakeout pattern for
Yeah.
those that do follow. Those who follow the pattern, shakeout pattern is a double top formation that does not break through, followed by a quick sell signal. You buy on the next point up. Expectation would be the pattern's completed with the triple top break, which in this case would come with a new all-time highs at 640
Yeah.
on the default chart. Now, a lot of nuances with that. There's a lot of other rules with the pattern, different things to keep in mind there. But at the end of the day, even though we're on a sell signal, it doesn't mean it's a super bearish into the world pattern.
And one thing I will note too is we got above 500 on that on the default chart, right? And that
Mm-hmm.
led to a change in scale. So it
Oh,
went from
yeah,
a 5 point to
that's
a
a good
10
point.
point. So if you look at the 5 point chart, really interesting setup here as well. Bounced off its positive trend line, has a lot of resistance above that it's going to need to take care of. But there was, again, its positive trend line was in around 560. There was support there going back to August, September of last year, bounced off that. Um, I mean, maybe we're just kind of carve out a range here moving forward and chop around a bit, see what's up
So you know what I
higher.
like to do? You zoomed in. Look at the 2% trend chart,
Okay.
um, which normalizes the historical move
Yeah.
back.
Same shakeout
Still in
pattern.
the shakeout. You're not taking my shakeout pattern away from me. But no, but I think that that's like you can do both. You can
Yeah.
look at that. The one thing I will say with zooming in too close, we do change the patterns for a reason. So I
Yeah.
would maybe or change the scales for a reason.
Yeah.
I would maybe look at the 1% box scale. Shows you very similar to picture what you just saw. It
Hmm.
doesn't have the trend line isn't the same, but you can still see the support resistance level in that 550 to 560 range or for the support level is still pretty close. And to your point, there's notable support around 612 or notable resistance, sorry, around 612, notable resistance at those 630-ish all-time highs.
Yeah. And I think the big thing is like this low, if it does get put in, is going to be really important because if it gets taken out, there's not much below it.
Shakeout pattern is negated if you reverse up and reverse back down.
Yeah. Exactly.
And so, which very well could happen,
Yeah.
right? And that's why we look at the charts, why we look at the patterns. I mean,
Mhm.
prices update, things change. Um, but I think that's important to monitor. Yeah, and even if we do get continuation higher, I think it's an important thing to keep in mind that doesn't mean that we're going to be domestic equities rockets back to the top of the dollar rankings, that we're going to have another 30% year from the Qs.
Yeah.
We could, but it doesn't mean it has to happen. From
Yeah.
that period we talked about earlier, 2002 to 2007, we still had years in there where domestic equities did well. They
Hmm.
just didn't do as well as international.
Yeah.
Right? And so maybe we'll see that happen. Maybe we won't. I mean, we're not saying that, but just because we're seeing other asset classes that are doing well, like we do talk about gold, we've talked about international, doesn't mean we have to see a ton of weakness from these
Yeah.
areas in domestic equities. It's called relative strength for a reason. It just might not be relatively as high, right?
Yeah. Exactly.
An area though, the other area that I mean, we'd be remiss about without looking at. You want to look at GSG or you want to jump straight to gold or
We can do
crude?
GSG, but I think gold might be a little bit more interesting for the viewers.
Yeah. Well, we definitely care about interest of viewers. I mean, you look at gold, still a suitable 3.48 fund score. That is really interesting. A little bit choppy in signals.
Yeah.
It's moved around a lot, but it did just jump back to a buy signal. Was very overbought, moved slightly oversold, and now it's almost back to normalized.
Yeah.
I would,
Bounced off support at 400 there, kind of chopped around a little bit, and then buy signal
yeah.
yesterday.
Prior, I know we don't technically classify it, but like prior support, prior consolidation, a lot of times I've noticed just becomes resistance.
Hmm.
So like your 445 level up into the 470s,
Yeah.
even though our first technical resistance point from here isn't until 480,
Hmm.
I would expect we might get some headwinds or
Right.
like
Pretty much
price
right where it's at, right?
price headwinds. Yeah, it's like it had a gap back up from its gap down.
Mhm.
And now if it can fight higher from here, I mean that would just be more confirmation at the end of the
Yeah,
day.
I think if it does clear that old kind of support area right around, let's say it gets above 450, that looks pretty good for another test of the highs. We're close to
Right.
the highs.
Right.
Yeah, definitely.
Yeah. And I mean, and looking at crude oil, maybe we'll end there as a special sixth chart for people to take a look at. Um, you talk about something you want to look at on a percent trend chart.
Yeah.
That's definitely one that I think it helps a little bit to look at that on a 2% chart or widen that scale out a little bit because we've seen a ton of volatility. But when you look back historically on this chart, this is not the first time we've seen several very volatile few weeks. Now it might be to the magnitude wise, it was pretty sharp, but it's no stranger to volatility.
No, not at all. Especially when you're looking at futures contracts, when you actually have to deliver the product,
Right.
things can get a little haywire, as we learned in April of 2022
Yeah,
when it went
yeah.
the other direction.
Did you get any in your kitchen?
No, no. But yeah, I mean, it's on a buy signal. It is heavily overbought at this point. We'll see. I mean, it's going to be headline driven. It's really hard to say, where the next move lies here. Um, some levels I'm curious to look at are going to be like what 85 here on this 2% chart about, and then the big level is going to be like 78, right? That old resistance kind of tested it back down after that move to 120, all the way back down to about 78, and then has moved higher since then.
Mm,
Uh, if we can see it get below 78, I do think that's going to open up, the 60s, mid low 60s. So we'll see. I think this one you're just gonna have to have some lines in the sand to watch and see what goes from there, because the headlines they're gonna come out, and there's not much you can do in terms of trying to buy and sell right off the headlines. Just
right.
just play the levels at this point, with how volatile this thing is.
Yeah. I mean, there's definitely a lot of stuff to keep in mind from a headline perspective. Looking at crude, I think it's also you got to factor in stuff like the US dollar
Yeah.
now, which obviously most crude is denominated in dollars. US dollars action's been different recently than we've seen historically, though, because we are net exporter versus a net importer of crude for the first
Hmm.
time ever
Yeah.
with this massive volatility hit, right? First
Hmm.
time we kind of seen that happen. So there's a lot of stuff to keep track of for those trying to trade. That's why we'd recommend you don't. You just follow our signals and dolly and stuff, and then you don't have to worry about it.
Yeah.
Everything filters down to the price action at the end of the day.
Yeah.
But yeah, I mean, those levels will be important to look toward. Getting back toward overbought territory, which I think is a little bit interesting.
Hmm.
We were so overbought before. Now we're very quickly had gotten back up there, backed off a little bit. I think it'll be interesting to see how this shakes out over the course of the next
By
couple
the
days,
time
months.
everybody sees this, we'll have, an announcement regarding the Iran war directly from the president tonight. So things could drastically
That's
change
very
by the
true.
time this gets
That's
released.
that's very
I'm going to
true.
put that disclaimer out there for everybody,
Yeah,
for
absolutely. We
everybody.
are recording this at it is now 3:48 p.m. on Wednesday, April 1st. I think what the speech is supposed to happen 9 p.m.
Yeah,
tonight.
I think so.
So we got 5 hours to go until everything we say is kaput.
Yeah,
So
completely moot.
nice. Or more of the same, we'll see.
Or the levels hold up
Yeah.
or break down,
Breakdown. Yeah. That's yeah. Great way to end the conversation there.
Yeah, yeah.
Levels, maybe they break down, maybe they keep going. But for those with any questions, definitely want to make sure to know those that are subscribers are always more than welcome to give us a call, reach out to us. We know it's volatile time out there.
Hmm.
Maybe Tuz and I haven't been around for every historical volatile event, especially around the Middle East and crude oil, but we know people that have. We have researched the price action. We can see that has. We're more than happy to help point you in the right direction to get you the help you need to help the clients. So with that, Tuz, you got any other
No,
charts?
no, thanks for having me on.
Cool. Thanks. Thanks for hopping on. Thanks everyone for tuning in this week, and we'll be back to touch base on other action next week.